Sir, if keep on FII selling in their portfolio, if they come back to Indian market again, so what do you feel that is the opportunity? Whether they'll go with the focus for large cap as a segment. So what do you feel as a retail investor or HNI investor can look for in future investment towards to the large cap?
You know, markets will give opportunity in every space. In the last 6 months, if you see, from April till July, in India, there has been a very big increase in terms of small mid-cap indexes, which were about 35% plus or minus. And large cap did moderate returns, maybe if I remember well, maybe just about double digit. So, if the valuations, because of this, if the valuations of mid-small cap have gone up, it may take some time consolidation or some price correction. It may happen. So what we as a fund house are suggesting to investors is this, that if they are coming in with a little lesser time, maybe 1 to 3 years, they should focus on funds which are more in the large cap space. It has more to do with valuation and some of the near-term risks like what is happening in Middle East. In case oil spikes up, we have Indian elections coming up. So from that aspect, we are saying you should look at maybe more towards funds like flexi cap funds, focus funds, which are more large cap oriented. But at the same time, if you come in small cap, mid cap, multi cap, just come with time horizon. And I think a lot of these things will be taken care of.
Yes, sir. You said really well.
Thank you.
Okay. If the current market juncture, if you felt mid and small cap is the undervaluation, can investor can look for mid and small cap as the opportunity. And number two, if they can look for mid and small cap as the opportunity, what would be the duration of the investment?
The answer is simply this: to start with, Indian equities are a great opportunity for the coming future. So, if I can just give you a broader aspect first, Indian economy is currently reached about between 3.5 and $4 trillion of GDP. So I have been in the markets for about close to 25 years. I have seen this economy from less than $0.5 trillion to this 3.5, 4 trillion that we are talking about. And in this growth, Indian equities have also grown. So I have seen a Sensex maybe from 1,000, but I would like to say 20 years back we were about 4,000 or so, plus minus. And now today we are talking when we are about 65,000.
Exactly.
So if this GDP, which is expected and projected to go to close to $10 trillion in about a decade or so, if that happens, automatically markets will follow that. And there's an old market saying, equities are slave to earnings, which basically means if corporates are delivering their growth, they're giving their earnings growth, automatically Sensex, stock prices, everything will follow that growth chart. So, to all, stay positive on India, and if that is it, one of the best options, naturally, you have to do a risk profiling, you should look across asset classes, but one of the best options in past has been equity, and I feel that on a risk return basis, equities will still be far superior than in terms of your investment basket.
Sir, see, people are always feel that China has an opportunity because there is a logistic cost will be lesser compared to India. So, what do you feel in India will be cope up with this logistic cost in terms of the expenses?
So Jonathan, what is happening is recently government has been trying to take care of some of these things. So if you see that, last 2 years, a little more than 2 years, they came up with a policy wherein they have been trying to subsidize manufacturing in India through a policy what we refer to as production linked incentive, or simply called PLI. If you see Gati Shakti, so that is a whole process which is being spearheaded by the government in terms of improving logistics, which basically simply means that improving movement through roads, railways, through air. It also means that government is trying to make infrastructure better by investing in more in power and so on. So all this ultimately will benefit us in terms of costs moderating, or in terms of cost, simply to put it, because this is a very ongoing and a futuristic project. And what I feel is, if all these costs benefit, naturally the inflations and input cost expenses you talked about will also benefit somehow. So I think steps are being taken, and we have already seen some of the good results in the last 20 years, where off and on, due to some international problems like crude oil going up, we had cases when inflation went up. Maybe some spurt when due to some monsoon volatility or so. But otherwise, inflation has been in very moderate state, in a state where it is acceptable state vis-a-vis growth. So we feel same will be for the future.
Amazing, sir. So, what do you think about the recent correction happened on the mid and small cap segment, sir? Did you feel it will correct further more, or how it will be, sir?
It's a Gopinathan, very difficult question. It's like trying to be the god of and predicting the future. But still, we are the market people, and we have to take some stand depending upon the probabilities and of choices that we have. So, last 10-15 days, we saw some volatility in the market. So, if I remember well, small cap and mid cap, they came down by about 5-6%. Large cap indices were down about 7%. But if you see last 3 days again, some of this has been recovered. So what I feel is this, that it is not this. What investors and what I feel and what investors have to understand is, it is not that only prices come down and then only there is a correction. It is possible that for some time the markets may remain in the same zone, and that is also a correction which we term as time or correction or consolidation of the market. Now the growth is intact, and as long as growth is intact, that growth will be delivered by these corporates only. It will be delivered by multiple other factors which contribute to GDP. So yes, sometimes it can happen that markets go little higher than valuations, current context of the market. But in that case, investors need to be little disciplined, because we need to put our thoughts back to the point that does the Indian economy offer some scope of growth in the future or not? The answer is still a very big yes.
Thank you, sir. So, last but not least, so everyone is looking for 2024 elections. So obviously, right? So whether the retail investor or HNI investor can look to hold their investment right now, and after seeing this election result, can we invest? So what do you feel on that?
If you ask me, my guess is as good as your guess, and both of our guesses are as good as any citizen's guess in India today. So everybody, we in May, around May, we'll have the central elections. So what we feel from the capital market is this, that irrespective of the election results, as long as the policies of growth, reform policies, all the policy questions that you put regarding in India's growth, as long as they are in a continuity stage, they are managed well. Markets may react short term to some of the sentimental results, but ultimately they will follow what the growth of the companies are, what the growth of economy is. So you talked about portfolio positioning. I will go with both sides. Do not be light on the market, because we don't know the result, and do not be heavy in terms of just saying that, look, results are going to be what I think, and accordingly I will take a position, because nobody is aware what the results will be. So in the last 2 decades, we have seen both sides. We have seen when markets fell after results and when market rose after result. But the net result thing is this: ultimately, this may be a phenomena for some time, and then markets, goes back to the fundamental ways of movement. So in case there is a correction after the results, take it as an opportunity, but the exact view can be only formulated, at that time. So this is what I'm going by the past experience, what I've seen in the last 2-3 decades of post elections. But the thing is, the base question still remains: are we a growing economy or not? Are we going toward 10 trillion? In the Bharat ka Amritkal space of 2022 to 100 years independence, 2047, Niti Aayog's planning of taking the economy towards $30 trillion by 2047 and becoming a developed economy, are those things going to be reality or not? So I'm saying even near reality will be huge opportunities. So we are 3.5, 4 trillion. Are we moving towards 10 trillion, 20 trillion, 30 trillion? Yes, it will come with time. So with 18% of the world population, with a population where the per capita income is growing, a country where infrastructure which about 60 years we did not see. Last 20 years of work has taken us to one of the best infrastructure positions in the world. If you see, in terms of digital India, we have done an amazing job. See the benefit that we are seeing in terms of QR code, scan, mobile usage of our UPI payments. And just see, I'm giving an interview and you're capturing me through a mobile. And this may be better than maybe studio kind of coverage. Exactly. So all these things ultimately, I would refer to this as a Triveni Sangam, where spending, consumption, manufacturing, and digital all are coming together at a time. So I think it's a good opportunity. So to take the call on India, invest in the Indian equities. Yes, you need to do your profiling. You have to sit with your, with a consultant, take some ideas, and then go for execution. But this is a rare opportunity. Yes, nobody can predict the future, but it is all about investing in the future, taking the future risk, and taking the future return. Returns have never been with the hindsight bias. Hindsight bias is always for learning. Future will deliver the results.
Thank you, sir. Thank you, Rohit.
Hi, thank you for watching this video. I hope the video is met with your expectation. Do follow on my page so you will get more update on your investments.